What's good, YouTube? It's Trades. Hope you had a happy 4th of July. After the 4th, I was like, I might decide to, take the step into the YouTube trading space and, start to post videos and get my kind of stuff out there, get my model out there. And I decided to take that leap, So now it's the first ever video post on YouTube. So, hopefully this gets out to y'all. Hope you had a happy 4th. And let's just get straight into it. So basically, this model is a mixture of ICT concepts. It is ICT concepts. Nothing else doesn't deviate from that. And it kind of relates to many other strategies by having a liquidity sweep, breaker structure, and including fair value gaps, breakers, order blocks, all that stuff. It's all the same thing, but the main things I really want new people to focus on if they're just trying to find a model that sticks is something that works and something that will always basically present itself. There's a big misconception that you need to find a trade every single day of the week. And this model over the past couple months has taught me that, the more I stay out of the market, the better my long-term profits, P&L, percentage, whatever you want to say, will be. Discipline prevails, especially with this model. And if you're willing to, submit to that process, submit to the time that's going to take, then you will be good to go. You will be very good to go. Okay, so I'm gonna step right into it. This model pertains 3 easy steps or rules. You need a liquidity sweep, which is basically, the simplest of the simplest things. You need some sort of liquidity to be taken, swept, or, manipulation, whatever. Second is you need that confirmation. You need a break of structure, in the charts in order to be able to, basically confirm your direction. And I'll get into some examples coming up. And then third, this is the most important part, what kind of deviates from other strategies and, other concepts out there, is that you need to identify 2 fair value gaps. And now we can kind of dive into the daily chart over here on the NASDAQ. Basically, I'll leave this up over here so you guys can see. So first, what do we need? We need a liquidity sweep, and this is the daily chart on NASDAQ. I want to kind of show this because 2 setups happen in the span of, you could have predicted all-time highs with this setup, and that's how I kind of, that's how I stepped into it kind of. So, we had this major sell side take. This is the September contract. After here, it doesn't really It doesn't really, the history's not there. Anyways, we had this major sell side sweep. And then the market started to, show some upside. So I was like, okay, what I need to see. I saw that liquidity sweep. I need to see one more thing, a break of structure. And if my Wi-Fi loads, we'll get there. Don't worry. Okay. So we had our sell side sweep, and it was a pretty major sell side sweep. And then what do we have right here? So the way I identify a break of structure is basically right here. So say we were bearish, right here. We were bearish. Down here we had bearish structure. We then put in an up close candle, another down close, and then we finally closed above this up close candle, this one, with this candle. And you need to close above. So that right there was my break of structure on a larger time frame. So now I'm like, okay, I'm pretty bullish. Now we keep on going. Still no setup. This is a daily time frame. Remember, time is fractal. The setup happens on every time frame, and I will go over from July 30th to the 3rd of last week's basically trading week, and I'll go over that, and I'll show you guys. I think it's 2 or 3 setups I had, and they were very, very good. So first we have, we broke. Okay, so let's see how we have, we're bullish right now. We broke this structure, and now we're continuing. Now we put in a low, we put in a high, a low, another high, and we finally break that low right here with this candle. So we break structure back to downside. So now I'm still, sitting there, no setup. So we have our liquidity sweep. We have a break of structure right here. Boom. This card, you can kind of, this is larger time frame. You don't have to really watch all this. There was no setup here yet for this particular model. However, we did have one here. So what's the first step? A liquidity sweep. We have a sweep of this daily low going into Monday of the April 21st. So we come in Monday, April 20th, sweep this low, and then we finally, get a bullish reaction up. We break structure when we close above this candle right here with this candle on the 24th. What am I looking for now? As soon as I see that we have this fair value gap getting put in, and then also the 25th closes. So we have two fair value gaps now. So now I have a liquidity sweep, I have a break of structure, and I have two fair value gaps. What do I want to see now in order for me to enter this trade? Because this is a perfect trade in order to basically not, I would say, identify, but confirm a direction in the market. So, you know, we're trying to shift market structure bullishly on a larger time frame, and now I'm starting to look for liquidity. We have this major liquidity at the 25th and 26th, and then we have all-time highs after that. That's a little hint. We have all-time highs after that. Anyways, this is where it gets kind of important. So the first fair value gap in your two fair value gap sequence is going to be a breakaway gap. You do not want to see price return back into this gap, as that'll show basically a weakness. What this strategy takes advantage of is the fact that price is very heavy in one direction. So it's either very bullish or very bearish, and that kind of eliminates taking trades that are guesswork, you know. Some days I would take a trade and it would be really good, but then other days, you know, I would still have the right bias and have the right direction, but my two fair value gaps would not present themselves, so I just was not able to take it. So I knew where the market was going to go, but it just wasn't full conviction with that two fair value gaps. That's what allows me to have such a high win rate and be able to, you know, take advantage of the one or two setups a week that happen with it. Anyways, so we identify a breakaway right down here. And then we have our next buy side inefficiency, sell side imbalance. So this fair value gap, I would like to see a price return into it and then leave us. So the entry criteria is, once you see this, you need a bullish candle reaction. So this bullish candle reaction is perfect. Right here is when the fair value gap gets created on the 25th close. We re-enter back in on the 28th, which is a Monday, and then get a bullish reaction and close bullish. That is a very important thing. You have to close bullish. Say, for example, this candle opened and then closed in here bearish. That's still no entry. Say this candle opened and, you know, came down and then closed bullish inside of the BISI. It still does not count. I need a candle that comes into it and then close out of it. It can be 2 consecutive candles, 3 consecutive candles, 10 candles, as long as we have a closure out of it and is bullish. Now, if price came down and tapped into our breakaway gap, that would be an invalid trade. So say, for example, this candle came all the way down here and tapped into here and then started to reject higher, I still would not take any trade off that because it tapped into that lower one, which I was not expecting it to tap into it. So once you see that bullish reaction, that candle bullish closure out of it, you take the long, and then your stop loss to go below the fair value gap, and you would target liquidity. And in this case, you know, you would target all-time highs as well as liquidity. And this is the daily time frame. Remember, it's all fractal. The next example I want to go over is right here. It happened more recently, last week. We had this candle, well, not last week, but it did happen last week. Because on the daily, it forms over like several weeks, you know, it's not like as quick because it's a daily time frame. However, it's the same thing. What do we need? A liquidity sweep. We swept out all this consolidation right here on Monday. We pushed up. Then we put in our first breakaway gap, our first fair value gap, which I want to identify as a breakaway. So say I come into this day right here on the Thursday, and I see that we created this fair value gap. Right there, what I'm thinking is that I want another fair value gap to be created. So I'm going to be bullish. So I'm going to be heavily bullish because I want to see price expand and not want to fill this. That's kind of not hindsight. That's like in the future thinking that, you know, you kind of get once you look for this model more and more. You're kind of expecting that fair value gap, the second one, to be created. Anyways, I forgot to do that. Okay. So then we have our second fair value gap was created on Friday the 27th. So what I'm looking for a candle to come back into it right here. And then I'm looking for a candle to close out of it. So right here, I'm not entering on this bearish candle because we could still push lower very well. And however, we didn't. So the next candle opens and then it closes bullishly back up here, respecting the buy side, respecting the BISI. And we also swept out liquidity. If you look right here, we had some relative equal lows. We swept those and then we push higher. So then you could take a trade right here, not on the daily per se, because you see how we're on all-time highs. There's really nowhere to target. That's a more intraday target. So right as soon as Thursday opens, I know that I'm going to be bullish as heck because we just exited a buy side and balanced side efficiency, and we want to continue expanding higher. So there you go. That's your setup for Thursday, a locked and confirmed setup no matter what. So now I'm going to go on to the 30th week. Monday the 30th through the 3rd, which was, that early week because of 4th of July. And this will give you a much clearer picture of, what I want to see. Okay, so this is very simple. Coming into New York session, we consolidate. This is a Monday. Sorry. This is a PM session trade. So we come up overnight. Remember, it's a Friday. And then we come up into it now Monday. So we start consolidating overnight, push lower. This New York session, as you can see, there was no trade. There was no two fair value gaps I could have traded off of. We had our buy side taken. And then we also had, a fair value gap here you could take a trade off of, here you take a trade off, but these aren't models that I trade specifically. So, it left. And how do I not, trade this? How do I prevent myself from trading in this, pretty bad market condition? Simply identify two fair value gaps in my bias direction. In this case, it was bearish on Monday, I believe. So I would have been bearish, and there was no setup here. However, once you wait for the PM session, something will present. So this is kind of like an A+ setup I want to go over. We have some 150 to about like 2 o'clock, like pretty volatile, like wickage. And once I see that wickage, I'm like, okay. So we leave relative equal highs on NASDAQ. We have an SMT, once we come into, 240, the 250 macro, I'm looking for an expansion into these relative equal highs. We have this wick right here with major sell side, and we come down, we sweep it. We have a sell side sweep, so we have our liquidity sweep. Next, we have our SMT with ES, so that's an even added extra confluence onto our trade. And now what am I looking for? Simple two fair value gap sequence. Oh no, sorry, let me add the break of structure. We have the break of structure right here when we close above this high. So this candle close right here confirms my break of structure. So what do we have? We have a liquidity sweep with an SMT with ES. So it's telling me that, ES was the stronger one because, ES had a SMT. It would have been up here somewhere. So ES was the stronger pair. So, you could argue that you should take ES. However, the setup presented itself on NAS. Anyways, we have our two fair value gap sequence after we broke structure. So what am I looking for? A respect of this upper BISI, and then basically not returning to this breakaway gap. So then what did I say? Once you get this fair value gap, you want to see a tap into and a bullish closure out of it. If it comes down to here, it's invalid. So what do? We tap in and we close bullish. Entry right there. Your stop loss to be right below the fair value gap. You don't want to put your stop loss all the way down here, below here, because you don't want to see any of this stuff being tapped into. You want to put it right below the fair value gap in order to have basically max RR, max, kind of minimizing your risk. But you can also maximize your risk by knowing exactly where price is not going to go. And then you simply target the relative equal highs. So, and immediately off Monday, you're done. For the week, if you want to be done, that's a 1 to 5 RR, which is kind of crazy. And that's the power of this kind of model. It basically eliminates you having to risk loose or risk a big stop loss, because in the futures market big stop losses can they can hurt. So being able to, 11 pip stop loss, it's pretty good. And then eventually, we take out the buy side, and then, we come for London highs, which we're consolidating all day. And also a little thing is that if we consolidate after New York session opens like this, it's going to be a good PM session. Most likely going to be a great one. So yeah, just look out for that. Okay, so then now we're gonna move on to Tuesday. And Tuesday is where it gets kind of iffy, because this is kind of how like you have to adapt the model. There's a certain way like you have to enter on these, and it's really specific because we come into New York session and we start consolidating, and I'm bearish on the day. Remember why I'm bearish for Monday, Tuesday until we hit our upper buy side imbalance sell side efficiency on the daily outline. Remember, I want to see price return into it and then close out of it so we continue expanding. So my bias was based on the daily. I can frame how I want to see my intradays on the daily. So what was that day? Tuesday. I want to see this. I should go over here. I want to see Tuesday's candle come into this buy side. Like on Monday, I would want to see it. That's why I was bearish on Monday as well. But I had to switch my buys to bullish because we want to take out highs. And then Tuesday, I'm still bearish. I'm still bearish until we tap into this buy side sell side efficiency, the upper one on the daily. I don't want to see this one. I just want to see the up one. And until we tap into there, I'm going to be bearish. So we go back on the 1 minute. Go back on the 1 minute. This is the major low of the daily candle in our buy side imbalance sell side efficiency in that daily fair value gap. So this major low is our target, my intraday target, kind of like what I want to target in order to see price start to go higher. So I'm bearish to there. What do I see here? So coming into New York session, I see a buy side sweep. I believe we had an SMT over here somewhere with ES. I don't know specifically, but I believe we did. And now, basically, this is kind of where the model, you have to be, I believe, advanced in order to kind of see where I'm coming from with this. So we sweep our buy side. So we have our first objective complete. Next is, you see how we have 1, 2, 3, 4, like 1, 2, 3, 4, 5. We have 5 up close candles to take out buy side. And then we also have 1, 2, 3, 4, 5, 6, 7 straight candles back to the downside. That is telling me that we are faking traders out, and basically like it's a turtle soup basically to the upside. So we swept out all the buyers in liquidity. There's no way, like there's no reason, for price to come anywhere back up in here. So what am I identifying that is? A balanced price range. Price ran through, swept our buy side, and then price ran back down through this area right here at this fair value gap, and then basically left right here, this balanced price range. So now this is where you have to kind of think on your feet, is that I'm still looking for 2 fair value gaps in the same price leg. So even though we have, one fair value gap here, one fair value gap here, one fair value gap up here, I'm completely eliminating the ones in the balanced price range because it's a balanced price range. Price does not need to return back up into there. So I use the next 2. So we have 1, 2, 3 fair value gaps in this balanced price range, but I don't need to use them. I'm going to use the ones that are outside of it. So we have our first fair value gap, that's a breakaway, and we have our second one right here. And also you could identify this as a breaker block. We push up, get our push down, come out of it, and then return back into it. So that's also your breaker order block traders also tying their concepts into this. And then it's a simple, remember, fair value gets put in, a respect. In this case, I want to see price go down, so I want to see a bearish respect to the candle. If we close, say, in it and then close back out of it, I don't want to see that close back out. However, if we tapped into this breakaway gap, then trade would have been invalidated, and I would have had to basically sit out and let price run. However, since price did not tap into this upper fair value gap, it's still valid. So we had this bearish close. Your stop loss would go above that candle's high, because you don't want to put it here because you don't want to see price go there. You want it above the candle's high, so that's kind of like a protected high. And then you basically target that daily low in that daily, not daily low, actually you could say daily low in that daily BISI or fair value gap. And basically that was an insane trade. This was I believe I had my stop loss up. Where was it? I remember it was at like 800, I think, or something. I think it was above here because I wanted to see, you know, usually, so say for example, I see our price came real close. You don't want to put your stop loss at the fair value gap high because it could do something like this. So put it always above that candle's high that basically you entered off of. And that's the most important thing right there. And then you would target that daily sell side liquidity. And again, what do you notice? The risk is so tight. You could risk crazy amounts on this and basically have a high conviction that price is going to go in your direction. So you don't have to have a stop loss above here, above here, above here. You know that price it wants to reject from that level with this model. And then I think this is the last one for the week. Yes, because this is on a Wednesday. Thursday there was no setup for it. So right here, what do we get? We swept out this major low in our daily BISI. So right here is this, right here is basically this. And we swept out two major daily lows. You know, again, you could call them relative equal lows if you want. But we swept them out coming into New York session. And that immediately tells me what I want to see. I want to see a bullish expansion basically out of this BISI. So I'm going to be bullish as soon as we swept it. I would have been bullish here too. After we did this, I was bullish. So it makes sense. Price coming down into here and confirming it even more was just an extra. So now we have our sweep. Where is our 930 open? Our 930 open is right here. So this is kind of where you tie in larger time frames into your trade. So for example, we swept our low, we had our break of structure. This is on the 3-minute time frame. You know, actually, I'll just show you guys. That'll probably be much better for you to see. It's the same thing. It's on every single time frame. So what do we have? We have our sell side sweep, our break of structure. We have one fair value gap that is a breakaway, and then we have another fair value gap right up here that I would want to see be respected and then expanded from. So where would I take this trade from the 3-minute? But instead I'm waiting for, New York open. In this case, you would get stopped out. But what are you not following? You're basically trading, you're kind of gambling that because 9:30 open is in a couple seconds, not a couple seconds, in like 15 minutes. So why are you trying to take that gamble? Just let price do what it wants to do before that. So you could also use this as a higher confluence. I don't take trades for 9:30 unless it's, like pre-market. I'll trade like from 6:30. I'll trade from like 6:30 until like 8 o'clock max. And then I'll wait from like 8 to 9:30 in order to get busy New York session. But you never want to really trade from 8:30 to like 9:30. That's kind of like the call it consolidation, like 9 o'clock. We just consolidate for a straight 30 minutes. Anyways. So you can see we did respect that 3-minute time frame with the 2 fair value gap sequence. And then next, now this is where it gets kind of tricky. You have to be, you have to look. This is a very precise model. So we had that breakaway. I can delete these 3 minutes. So what do? We had this liquidity sweep. We already broke structure. The 3-minute got respected. Immediately off open, I'm bullish as heck. I want to see price start running because we respected a daily imbalance. We just swept major lows. And price is immediately telling me that we are bullish as heck. And what do we have up here? Overnight highs that are very, very, very liquidity. Like they have a bunch of liquidity up there. So what do? We identify the liquidity sweep, break of structure, and then 2 fair value gaps. So we already had our liquidity sweep and break of structure on a larger time frame. I don't really care. I don't need to see that in the 1 minute. So what I do, this is also, you can say a liquidity sweep. I believe we had a liquidity sweep on ES. We had a little SMT. Anyways, what do we have here at 9:27? We have our first fair value gap. That is a breakaway. What do we have here at 9:32 as our first presented fair value gap right here? We have another BISI. Candle really disrespects it, but the next candle closes back above. So this is a validation of if we came and tapped back into here, then that's when I'd be like, all right, this trade is invalidated. However, this immediate candle reaction back above, long immediately, short, not short, stop loss below that low, and then you would target that relative equal high buy side on London. And yeah, that's kind of this setup. So that's 3 setups that yielded crazy potential over just a week. And that's the thing with the setup. It's not going to happen every day. It might not happen for 3 days in a row. Like last week, here, I'll show you what happened on last week. Last week was a terrible week. There was no trades for this model really, only on Friday. And then what happens when we go to Friday of last week? Here, I'll see if we can go back that far. We can't go back that far, but we had a crazy fair value gap setup that basically gave me all my profits for the week, and I was good to go. And it was on Friday, the last trading day of the week. So yeah, just remember 3 simple rules: liquidity sweep, break a structure, and then identify the 2 fair value gaps. And also, these 2 fair value gaps must be basically like in the same price leg. Like you can't just identify it on a larger time frame. Like, let's see if I can find something really quickly. Trying to find some like New York session or something. Yeah, like right here is one of them. So what is it's like 10:45. Larger time frame, it kind of happens on you have to be like kind of ready for it. Yeah, like right here is a good one. So we had this push up. What is this, Thursday of, no, that's too far back. I don't want to like find something. Let me see real quick. Yeah, like when you see this right here, you see we have like 1, 2, 3 fair value gaps. Just because you see this upper one being respected, you say, oh, it's 1 fair value gap, 2 fair value gap. It is not. It has to be 2 fair value gaps in the same price leg. So like right here, we have our first fair value gap, second fair value gap, third fair value gap. You can't trade off of that. That would still be all invalidated. However, say for example, see, it's hard. It's honestly on the 15 minutes, a pretty bad time frame to find it. I'm not gonna lie. Yeah, I'm just kind of skimming around. Right here we have a little setup. So what time is this? 10 a.m. So we come up. Oh crap! We come up, and we decide to sweep out liquidity coming into New York session. We have 1 fair value gap right here, and we have 2 fair value gap right here. I want to see this lower one be respected in the same price leg, and then continue lower. And in this case, your trade would be from right here, 3s are sweep, and then you could short overnight into it, but that doesn't really I'm just kind of showing you an example. And then right here, boom's another one. Here's our first fair value gap, and then oh no, that is actually 1 fair value gap sequence. Okay, but you guys get the point. So that's kind of it. Let me know your thoughts and and anything you guys kind of want to say. First video going out. Interested to see what you guys think, and I'm gonna start doing daily reviews, trade recaps, and stuff to kind of document my trading process. But more importantly, if you guys want to see more, just let me know. Thank you guys, and peace out.